Welcome to the Hustlewing podcast. Today we are joined by George Kailas, CEO of Prosper.ai. Now, Prosper.ai is a fintech platform that aims to democratize access to investment research and financial tools using AI and machine learning. Hi there, George. How are you doing? Thank you for joining us.
I'm great, thank you. You just gave a great pitch. I'm not sure I'm even necessary here. That was a great summary of what we do.
Oh, come on, come on, come on. I have two questions for us to kick off the conversation. I'd like for you to tell us a little bit more about Prospero.ai and the work that you guys do, and maybe if you can touch a little bit on how AI is changing the finance industry.
So yes, I actually have been in AI in the finance industry for 12 years. I started an AI as a service company when I was 25, a long time ago. I know I probably look pretty young for 38, but yes, I've been a veteran in it, and Prospero's evolution, and actually this kind of I think speaks to what I'm seeing in the space and things I like and don't, especially in AI and finance, is when I started, I was working with a lot of institutions trying to build things like arbitrage opportunities, look for mispricings, using AI to like really tackle organized big data and simplify it for the people that were looking to get more into technology. And it was kind of funny because back then when I started, I would say 80% of the people I talked to, basically financial institutions, everything from small to medium sized hedge funds, all the way up to big banks. My last project was actually and that was only about 6 years ago that I started that now, for one of the like top five biggest banks in the world. Uh, but it ranged from people pretty much being like either, oh, these are new ideas, this is great, we need to move forward. But there was like 20% that said, what you're doing isn't interesting. We've been doing this for like 20, 30 years already. So that is always the interesting thing when you look at AI, I would say generally. And our path with our product and kind of like examining it through that lens was we moved from trying to solve, I think, our major problem and something that I've cared about for longer than Prospero or longer than my first company, which is leveling the playing field for retail investors. Uh, and the original idea was something of finding arbitrage. But as I got to know retail investors more, worked more on the first company, even tried to do some competing with hedge funds in what you might call like non-linear equation competitions. And we have joint IP with NYU. We had some great minds working on it. But in a non-linear equation competition, and I'll get this to some of the other AI like companies and some of the upstarts in the space, uh, you will lose to a hedge fund. And that is a pretty fruitless endeavor. And when you look at something like Renaissance Technologies, that's been around for, 30, 40 years, they've done extremely well. They actually only hire people that are mainly PhDs, but have never worked in finance. That disqualifies you because they want you to take a scientific approach. Um, the idea that you can compete with this team of scientists that have been working on a problem for 30 years that has like much more money and much better data sets than you, that kind of on its face, I think is not something that anyone should be claiming to do, yet a lot of people do claim to do it. So our product evolution was really, I would say, an iterative process with retail investors, taking kind of institutional grade algorithms and communicating with them and figuring out how to get them to improve their process, improve their win rates by putting better information in front of them that they had. And we thought that that was the most tangible way to actually help a lot of people. So our interfaces actually were in November, we're going to launch V4 of our interface. This is V3. But we really have put 4 years of work, I would say, into studying what helps people make better decisions and how to support their decision making process. And I would say there's two good stories that I have for that process. The first one is that um, basically when you ask people and when people started using our product, they said, well, just tell us buy, sell, hold. Tell us what we need to buy. You need to put a rating on this, is what we're familiar with. And so many people asked me to do that. And I was about to, but I said, wait, let's do a little more research first. And I asked a lot of those people, I said, what is an appropriate hit rate for you? on a buy rate. And they were all like 60, 70%. Some said higher, but the bulk of it was in those. And for those that don't know, 51% is excellent for a hedge fund. So your people are expecting a product that is completely unrealistic. And that's why I think people don't like price targets. So it's one of those product questions where what they want, they can't have a price target that works at an unrealistic level, or a buy recommendation that works on an unrealistic level. So that was a very formative part of how we ultimately built the product. And the other way that I would say that's been very, very powerful for us is we have a general philosophy, and I do. I taught myself accounting to work at my first hedge fund when I was 17. I worked at Columbia Business School for a very prominent business school professor before that. And I've been trained, I'd say, as well as anyone, both in the value investing side and then the AI side. But my approach is always wanting to learn more from retail investors than talking down to them about what they need to know from me. And our best metric, net option sentiment, that's one of the things that's actually helping us hit at about a 70% rate this year, came from me actually trying to teach so many retail investors how to read an options chain. And it was like one Friday, and I was a little frustrated. And I was trying to get through, I'd spent like maybe an hour with this person. And I finally was just like, what if I told you the options markets like this stock or didn't like this stock? And he was just like, yeah, well, we're wasting a lot of time if you can tell me that. And I said, oh, great. Let's just do that. And we already had all these formulas. So about halfway through my arbitrage machine building days, we started to focus more on a realistic problem. That is what completely differentiates us, which is understanding where institutions are making their options bets and then visualizing that information. And that's essentially what net option sentiment is. We're not trying to beat Renaissance Technologies or Bridgewater or whoever. We are actually trying to amalgamate their intelligence in how they specifically price options. And the easiest way to understand it is call options, a bet that a stock is going to go up, versus put options, a bet that a stock is going to go down. We look at how much more people are paying for the bets above than the bets below. And we look at that on the market level, we look at it on the individual stock level, and we scale it all. So you could basically see how many people are betting on QQQ, or SPY, the S&P 500, versus the extent that people are kind of betting on Tesla. And a lot of our success stories are within that scale, and it makes it very easy to see, oh, institutions are betting a lot on these stocks, or much more than they are, more bullish on these than other things. So that's really what powers our whole thing, and just like makes it, I write a newsletter every week, and it actually has become pretty easy for me to spot these things. And the coolest story is we've now rode Tesla up 3 times this year and dropped it before it's gone down, because we pay a lot of attention to this. And the second time we bought it, one of our power users came up to me and said, hey, isn't Tesla doing what you pointed out last time? And I looked at him, and I wasn't very interested in it, and I kind of shrugged him off. I regret this a little bit. And I said, oh no, Tesla option sentiment runs higher. I'm more interested in Amazon and Meta right now. Thanks. But I totally blew him off. And then a week later, I didn't totally blow him off. I just blew him off at the moment. But I started watching Tesla, and I was like, you know what? He's right. This is the exact same thing on last time. And when I added it again, I actually showed a picture on Twitter of it looking pretty much identical to the first time we added it, and wrote it up. So yeah. It's kind of an interesting hack.
Sure. You give us a lot of things to think about just around the space, around the growth and around opportunity, and how it's also quite important to always be on the pulse of what's happening. And that's what I'm getting for the most part. You touched on the newsletter, and I was reading up on it, and what I appreciated about it was that it also simplifies, right, the process. Because I think often when we think AI and when we think the finance industry, we think a lot of big terminology that one might not be able to sort of understand, on the go. I think what the newsletter does, it sort of breaks down the information in a way or in such a way that a layman person can almost be able to understand the information quite quickly and easily. I want you to maybe talk a little bit about the newsletter and some of the concepts that you guys touch on that platform.
Yeah, so I appreciate you thinking that. Some people still think it's a little too complicated, but it's hard because it's hard to reach everybody. But yeah, I think the big thing, a lot of people weren't necessarily catching on with the app before we started writing the newsletter because we needed to give people more direct situations of how it works. So yeah, I think an important thing that we're trying to do is create a different kind of language to discuss, because I do think there's a lot of gatekeeping terms in finance that are trying to make it overly complicated. So like, for example, some of our metrics like upside breakout and downside breakout, like there's a lot of machine learning behind those, but ultimately someone can look at it and understand pretty easily like what that is telling you about the the outlook for the stock without necessarily saying like this is a buy rating or whatever, putting it on a scale, I think is very important. But yeah, I think when we think about the process and simplifying the process, it's really just like I think going through important motions that retail investors don't necessarily do. Like the way we lay out the letter is we go through what we're seeing in the market, which a lot of people miss. A lot of people will just go through stocks and not look at the market. So we always put that in front because you're never going to do well buying stocks if the market goes down. No stocks are going to do well, or a very small percentage, and it's very hard to pick those out. And the same thing for the reverse. If you're looking to short stocks because you're late and you're bearish on the market and everybody else is much more positive, that's tough. So we try to do that, and then we try to zero in on what metrics we like with stocks and create patterns of like what is successful, what isn't. Like I think a really good example of one of the things we recently shared, and it was something that I was learning too, because I just did the research myself. We have a dark pool rating and a short pressure rating. And for those that don't know, the dark pool is where institutions can trade outside of market prices and just transact with each other out of the general trading population. And obviously short pressure is stocks that they're pushing the price down to, get, to short it, and they profit when the stock goes down. So what's interesting is eventually stocks with high short pressure go down over a 6-month time period, like the shorts win. But dark pool rating, which people also use to keep the price down, actually we found out that over like 3 months, institutions could win at that. By the time it got to 6 months, the stocks would go up if they had high dark pool ratings. So the market price would eventually catch up versus like the short sellers would eventually win. So I think that like that right there is just kind of knowledge that even as we go through, we're just trying to like impart as many like little lessons
Yeah.
alongside stock picking and market intelligence. And I think that's why, people like it, because we're giving a necessary perspective and a different perspective, but we also want to hold people's hands to learn the concepts so they can harness them. We don't want to just tell people what to do.
Yeah. Earlier on you spoke to competition and also just, trying to navigate the space with that in mind. And my next question really looks or wants to explore around opportunities that can be found at Prospero, because we do have, a diverse network of skilled professionals that might be interested in sort of plugging into the platform or the organization and sort of trying to expand or even contribute to some of the challenges that maybe Prospero comes across. Could you maybe touch on a little bit around opportunities that folks that are listening might benefit from or might be interested in?
So the easiest way to participate is we have a Discord, and then we actually have a lot of our users have graduated to a really cool thing that we're doing, which is like crowdsourced portfolio management. And so we're actually teaching people directly how we're making the decisions, how we're investing with the signals. And we are going to hire a community manager out of that as we raise our round soon. But even just we give out equity for active participants. If people like what we're doing, that could convert to cash when we raise our seed seed round really soon because we want to build that community. That's probably like the easiest way. And we're taking a lot of people in to help. And even people that want to get hired, I'm funneling there because I think it's important that they get to know, whether they're a front end developer or a back end developer or anything, knowing the signals and connecting with them, and validating our mission through that is actually important as we think about hiring over the next few months. But we will hire back end developers, front end developers. We definitely need help on marketing, social media, like across the board. We've been bootstrapping for a long time, and we're very close to raising our seed round. So yeah, tons of opportunities. Please get in touch. Please pitch me on stuff. I do most of the hiring. But yeah, I love new ideas. One of the things that I'm actually just talking about right now, we're working on marketing. If someone knows like Chat GPT, well, I use it sometimes, but I'm even still like, oh, what prompt do you use? Like, I'm no expert by any means. But that's an interesting one. Like literally just today, I was asking someone for a prompt for redoing our website, and someone that's like skilled in that and knows some of the magic behind those prompts is great. And it is kind of funny how much that has changed. And even like an old AI veteran like myself, like it's a whole new landscape. It's a whole new ball game when that came in.
Yeah, George, look, I am very interested in this product. As I was doing my research, I was just learning quite a lot. And I think also I'm quite appreciative of the fact that it's also almost like a connecting tissue, between someone who's just interested in figuring out the world of the financial sector via technology. And I think what you guys are doing is quite brilliant. Before I let you go, I do want to find out from you, how do you think AI can drive productivity and value in the financial sector?
Well, I actually think of AI as the great equalizer. Like the funny part, and there's tons of opportunities to do that, but the funny part in the Prospero story was all of this alternative data coming into the market. My last big project for a major bank, I was using a lot of it. And what's interesting is like when I started out in finance, it was an impenetrable fortress. It would be you would go to a golf course, you would get a wink about earnings, and that's how hedge funds pass around information. But now billions are spent on alternative data, which is basically data that people generate. So all of a sudden, part of what we're capitalizing on is the fact that they've actually given away power by depending on this data that they grab, like real-time credit card swipes, camera data, web traffic, satellite images. It's crazy how much they use. But at the end of the day, the people own that data. And I think data is the new gold. The value, a lot of people say that. The value of technology is going down and the value of data is going way up. So that's like basically our long-term solution is that we want to be able to ask people questions like, what's your temperature? And be able to model a pandemic in real time and essentially do what the US senators did, except instead of them hoarding the value and controlling the information arbitrage, well, they were like reassuring the public that everything was okay as they shorted the market. We are going to get that information and distribute it equally and be more like a public utility with it. And that I think is something that we're doing generally because we're going to create an incentive to give us more data and share the value. But I think that's something that everyone should be thinking of ways to do because technology really like the thing that like drew me away from finance and into technology is just that like at the end of the day, you could be a huge organization and be disrupted just by a good idea and a dedicated team. And that wasn't necessarily true before you had like things like open source code and a lot of stuff that you can just get started really quickly on the work that everybody else is just like putting out into the world. And I think those are the two things that I would encourage. And we're definitely going to do this along the way, like open source code. And just like not being afraid to get together, share data, and build something new, and it's attainable very
Yeah.
much if you're
Yeah.
dedicated. And I think I'm kind of a living story of that.
Yeah, George, listen, it's been a pleasure. Once again, before I let you go, social media platforms, websites, where can folks find you?
Prospero.ai. Prospero_AI gets you to our Twitter. Our YouTube is, I think, Prospero.ai. Those are, I think, our main, communication platforms. But yeah, download the app. You download the app on Prospero.ai. That automatically registers you to sign up for the newsletter. And always just email me, George at Prospero.ai. I love to talk to people about the product, talk to people about the company. Don't be afraid to do that.
Thank you so much, George, for your time. Brilliant
Thanks for
conversation it
having me.
was. Sure.